Welcome back. It is time now for On the Radar, and we're back with Brooke Thackray, research analyst at Global X. Okay, so Brooke, you've got a couple of picks here. We're going to start with the energy sector. So BMO Spider Energy Select Sector Index ETF.
Right.
What do you like about this one?
Well, first of all, so this is a fund that BMO has, and it's based upon the U.S. energy sector. Mm-hmm. So State Street in the States has a number of big sector funds, including XLE in the States, which is an energy sector. And this is the BMO version of it in Canada. So that's why it's got the Z in front of it. So you're able to get the U.S. energy sector in Canada, and you can get it in U.S. dollars and Canadian dollars, either or, depending on the ticker symbol. But the reason I like this is I think the energy sector, first of all, is coming up to a strong seasonal period. And if we've seen the energy sector do well, the U.S. energy sector has actually lagged the Canadian energy sector on relative performance over in 2025. So I think there's maybe some more opportunity in the U.S. energy sector. I think they're both good. I think we're going to see this continued rotation into the commodities and commodity stocks as well. And I think, yes, sure, there's a possibility of a U.S.-Iran war, as far as that goes. But even aside from that, we're still seeing this rotation into the energy sector. And in the States, if we look at the graph from the energy sector, it's actually doing a breakout right now as well. So we're seeing a positive breakout, positive trend at the time when energy stocks tend to do well. So I think it's a good place as far as a part of the portfolio goes.
Just quickly, why was the U.S. energy sector lagging behind Canada's?
Well,
maybe there's a bunch of reasons and we don't have time to go into it, but I thought that was interesting.
Yeah, I mean, Canada's more of a value play. It's a little bit more specific. The actual mix between gas and oil is a little bit different. So there's a number of reasons.
Got it.
But I think we're seeing a decent opportunity as far as U.S. energy goes here.
Okay, your next on the radar pick is Eastman Chemical. What is it you like about this company?
So Eastman Chemical, the reason I like it is it has a really strong seasonal period here. I've written some books in the past, and this I've always included Eastman Chemical in here. It tends to do really well from a strong seasonal period from late January into May. And last year it had a terrible year, which is great. So it was missed its estimates twice in Q2 and Q3, which is a disaster. It was kicked out of the S&P 500. So these are, and so now that's all washed out. It's a high dividend paying stock that's come back. It's trading a PE ratio of around 10. So I think that given that we're in that strong seasonal period for the stock and the sector, chemicals, I think this is, it's being so badly beaten up. And we're actually starting to see some pickup here. You can see this here on the graph. We're seeing it start to do extremely well here just recently. So I think we're past all the bad stuff. So I like it.
And it's an upward trajectory after a bad year in 2025.
Absolutely, yes.
Yeah. And as you say, we're seeing that on the graph. Okay, your last pick is Global X Copper Producers Index ETF. Copper, obviously, always a big topic of discussion. What do you like about this one?
Well, full disclosure, I work for Global X.
Yes.
I think that what we're seeing here is we've seen copper do extremely well in 2025. And I think we're going to see the continuation of that. And the copper miners are doing extremely well. We're short copper. We don't have enough copper. It's not even close. It's not like, we're just off a little bit on our go forward plans as far as data centers go, EV cars, et cetera. We're just so short, and it takes forever to build these mines. We've heard this story before. The reality is catching up now. That's why we've seen copper do extremely well here with the graph here. You can see here rising rapidly, really, in the last few months in 2025. And I think that can actually continue. The trend can continue here. So I think copper miners is also a good way to invest in that sector.
It's kind of scary, like not for copper. I mean, it's great for copper, but the lack of supply and the demand, that increasing demand, we're going to keep needing copper for so many things, and we just don't have enough of it.
Yeah, and if you saw Donald Trump announce that the U.S. is going to be doing a $12 billion strategic reserve. I think it's called Project Vault, if I'm correct, and it's going to have the critical minerals. So China stores minerals in case it needs things.
Yes.
But the way the U.S. works is, companies are ordering copper or silver or whatever it is for just in time for their inventory. But there's no central hub. In the U.S., they have what's called a special reserve for oil, the SPR. And that's in case oil prices go too high or something. And so this reserve is released into the markets once in a while to help buffer out problems if there's a big problem. They want to do the same thing with critical minerals because they don't want to operate just in time. If all of a sudden they can't get something and you can't build a F-35 or whatever it is, that just doesn't make sense. So they're starting off with a $12 billion critical mineral special reserve. And I think it'll actually grow. So I think copper is part of that, by the way. So the demand's only going to get more and more and more here.